Hello everyone, and welcome to another episode of TA and Chill. Um, so I don't have a script, so forgive me if I ramble on a little bit. I'll try and keep it below 10 minutes this time. I think I managed 20 minutes last time. So um, AMC, it's been a really tough day. I know a lot of people are feeling probably very emotional about it. A sea of red across the stock market. It's not AMC in particular that's suffering here. So let's put that into some context. Let's have a look at the stock market heat map overall. So AMC is apparently holding up quite a lot better than AMD or even Amazon. So if that doesn't make you feel much better about things, I don't know what does. And also Tesla, doing better than Tesla. So are things that bad? Who knows? Um, so let's move on to the charts. And to start with, you'll probably notice this kind of weird Space Invader vibe thing I have going on with the 4-hour chart of AMC here. These are called Renko candles, and we're going to use them to snap on some lines of support and resistance, like so. And what you'll see is that they they function at all time frames. So just snap these on like this, and a little bit of support here. Okay, and the thick one at the bottom is the strongest level of support that I don't want to go beneath if we can avoid it. So let's move that out of the way and go back to normal candles. Okay, so to get a quick multi-time frame overview of AMC, the easiest thing to do is to use Ichimoku, which you may or may not be aware of, is probably one of my favorite indicators. It's kind of a all-in-one setup here, and it means equilibrium at a glance in Japanese. So what's the situation with AMC at a glance? Well, on the 1-day time frame, there was a negative cross a couple of days ago above the clouds here, which centers below. We're sitting on this kind of long-term diagonal trend line. So we haven't broken that yet, which is quite positive. We have stronger support beneath that at 35, and I would say that this actually remains a higher low. Even let's look at it on the weekly chart here. When in doubt, zoom out and all that. So this candle here, although it was a very rough day, what's really important is that it remains a higher low compared to the most recent previous low here on November the 1st, which was at 35, and we ended the week at 37 and change. So overall, I think things could be worse, to be honest. So what does that mean for the week or two ahead of us? It means that we have, due to circumstances, a lot of overhead resistance right now. We are kind of between a rock and a hard place. We've got strong support beneath us here, but the problem with what's happening at the moment is that we are beneath some important levels of resistance and support. Let's just go with the 21, the 55, and the 179. I'll turn off Itchy for a moment there. So on the daily, you can see that we've broken below these levels of support, 21 and 55 here, but we've still got the strong long-term support beneath us here, and as I say, this rising demand line, which is good news all in all. So with that out of the way, let's have a look at some of the other indicators. So let's load up the RSI and the EMA on the 4-hour here. 4 hours quite a nice balance between the 1 hour and the 1 day or longer term. So let's have a look what's going on here. So On the shorter, I mean, things are looking okay on the longer term here. I think if you really go up to a week, it's it's pretty good overall. And actually, we are above the 55 EMA on the weekly chart, which is decent. But let's zoom down to the 4-hour here. So on the 4-hour, we we are below the clouds and we're below this support here, but we are still setting higher lows, and RSI is setting consistently higher lows here, and we're above the bearish control zone there. So I don't really want to go any lower than this. And let's have a look at the DMI here. DMI, if you're not aware, you have the average directional strength in the middle here. That's an average of DI plus, which is the positive trend here in green, and the DI minus, which is the negative here trend here in pink. And the blue line is kind of a mixture of the two, and the lower it goes, the brighter it goes. So that indicates that volatility is coming up. So 23 is an important level on the DMI, and trends, at least in the short, trends do get validated by being above 23. So on the 4-hour trend, 4-hour chart here, you can see that the negative trend took over 23, which means that at least on an hourly kind of time scale, that the bears are in charge for the time being. Having said that, though, the trend itself is actually not very strong. If we look at the ADX here, we can see that the average directional strength combined is actually flat. So this isn't a very this isn't a particularly compelling argument for the bearish camp. And if we back out of this and look at let's look at volume on the daily here. So the volume overall is just so low. I think this is 19.7 million for the day here, which is incredibly low. So you might say that neither bulls nor bears are really in charge at the moment. There's not. I mean, long terms, I would say the bulls are in charge, but for the moment, it's indecision for the most part. This candle is positive though, having a very short shadow, a short lower wick like this. And over the course of the day, the price moved down very rapidly, but the bears weren't able, as I said in my tweet, able to keep the price there. So price has been kind of gobbled up in that respect, and you've got a pretty short wick on this, which means that there was good demand for AMC down at 36 here. So long-term support is intact, 179 EMA steadily rising. There's a couple of rough things going on lower time frames. Have a look at the hourly. Look at the hourly here. I think things are actually even better. I mean, things aren't great, but they're a little bit better. I mean, the negative trend here is kind of easing off. 40. I mean, it has been a strong trend, but most trends get turned around at 38.40 on the DMI here. So the negative trend, I would say, is probably easing off a little bit here. And we'll have to hope that this doesn't go too much further, and that the negativity kind of boils off the indicators over the coming days, and we just carry on consolidating. As long as we're consolidating at these high levels, then there's really not too much to worry about. So that's Ichimoku and the sort of general situation out of the way. I do have one piece of good news for you kind folk, and this is probably not something that a lot of YouTubers are going to dive into. So let's load up some harmonics. Yeah, perfect. So Here on the daily, actually I should probably say if you don't know what harmonics are, in a nutshell, they are basically measuring the Fibonacci ratios between different points in an area, and they form different patterns like ciphers, bats, Gartleys, and that kind of thing. And on the November 11th and completing today, and as I say, even though it was a very tough day, there was reason to hold tight and to hold on. So let's go down to the 4-hour to make it a little bit more obvious. Yeah. So on the 4-hour chart, we obviously gapped down this morning with a very violent gap down. But if you were looking carefully at the harmonics here, you would have seen that this was actually bullish. So we touched this long-term trend line, created an anti-cipher. I don't know why they call it an anti-cipher. An anti-cipher is bullish, as you can see, because it's down here at the it's at the D, yeah, the D point. In my experience, the harmonics will quite frequently reach approximately target 1, sometimes a little bit further. So on the daily chart, this is actually pretty positive for AMC, and it wouldn't surprise me at all if we did hit something in the region of 30, 38, 39 in the coming week, provided there isn't, more bad news to do with the COOF and that kind of thing. So yeah, we're still in this trade here from 36 up to 39 or so, and then we'll just have to see what happens there at 39. There are other levels of resistance that we'll have to address when we get there, such as at 38 on the 4-hour time frame here. Did I say? Yeah, 38 even. Yeah. So that looks actually pretty good. All in all, I don't think the bottom is going to fall out of AMC just yet. So if that was at all helpful, if that helped you get through the day, drop a like below. But before I go, there is just one more thing that, and I think this is a good lesson overall as to why technical analysis is really important, and why everybody should at least try and learn some of it. So this morning, when we opened up with this very aggressive gap down, let me load it onto maybe the 15 minutes so it's more obvious. Yeah. So you may or may not be familiar with Bollinger Bands, but they're extremely useful for measuring volatility when they constrict. It means price hasn't moved very much, and when they expand like this, then volatility is diffusing, a bit like squeezing a tube of toothpaste. So this morning, when we had this very aggressive push down, price was clean outside of the Bollinger Bands. And if you know anything about Bollinger Bands, you'll know that that's really unsustainable. It's very rare for price action to remain outside of those bands for very long. And in this context, what it told me was that, the bear case for continuing to short AMC was really unsustainable beyond this initial push down in the morning down to 36. And then when you combine the fact that this is very abnormal to be 2 standard deviations, and that's what the Bollinger Bands measure outside of the bubble is, or the bands is 2 standard deviations. To be so far outside of the Bollinger Bands is not sustainable. So when you combine that with the fact that there were positive harmonics going on, told you that this wasn't really sustainable and we were likely to move up, as indeed we did. So thank you for making it to the end of the video if you did manage to. Feel free to drop a like and subscribe. Hit me up on Twitter. If there's other things that you'd like for me to have a look at, I'm more than happy to do that. And yeah, I've just started this YouTube channel because I think it's really important to have some mature technical analysis that doesn't involve, screaming and shouting and the kind of panic that that gets so many clicks on other channels. So with that, please feel free to gently caress the like button, and I'll see you guys again soon.